Good day, traders. Welcome to another interesting topic I want to bring to you in this video. I want to discuss with you my entry strategy that really failed. Discuss with you my entry strategy that really failed. 4 things that confirm my entry after I'm done finding my direction. Of course, you know how we do it if you have been following this channel very well. So before we go into any trades, we must go to find the fundamental direction of that particular pair. For instance, we want to look at the case study of Australian dollar, Swiss franc, CHF. We're not going to go to the background check that I usually do. Go into fundamentals to check the state of the economy of Australia, whether with the state of the economy of Switzerland. I don't need to go there because that is not the main agenda for this particular lesson, guys. What we're interested in is after you have found the state of the economy of Australia and Switzerland, you know, getting their interest rate data, their inflation rate data, the GDP data, and of course, you want to pay particular attention, guys, to government deficit or surplus. You also want to pay attention to what we call trade balance, guys. You want to know if the country's economy is very sound. You want to know whether they are exporting more to the outside world than they are importing. Like in the case of Switzerland right now, Switzerland is exporting more than it's importing. You want to know some of these stuffs, like Japan. Japan is exporting to the outside world more than it's importing. All right, these are economies that can take care of themselves absolutely. Okay, you want to know all these. Based on these, you're going to find out what you should buy. Whether you should buy Australian dollar against Switzerland, Swiss franc, or you should sell it. So that is just the background check you must do before you take an opportunity. But let's assume we have not done background check, but let's assume that after doing our background check, we want to buy Australian dollar CHF, AUD CHF. We want to buy it. What you can see 4 things that confirm my entry after I'm done with finding my direction. Let's say I'm done finding this direction that I want to go up. So what are those 4 things, guys, that I must see before I take the trade in that direction? These I have simplified for even people who are just starting off, people who are beginner in this business. They will find this very useful and very applicable. And those that hitherto been trading for quite some times, but they have not been profitable in trading, they're also going to find this video extremely useful, guys. They're going to find it extremely useful. So what are those things? Because most of you just click buy, sell, buy, sell, buy, sell, buy, sell without defining your reason for doing the buy and sell. For instance, if you look at this place, assuming that you have noticed that here you want to take a buy to the upside, okay, and you have this move. This move has not broken this top, so it's still part of the downtrend. Even though the uptrend started here, it is not in your place to take it to the uptrend is going from here. You have to leave it because it has not broken this top. But this one, guys, has broken this top. Okay, but the first thing you must see is that impulse into the direction of the main trend. So you can take this to be an impulse into the direction of the main trend. Look at it from here, let me show you. From here to here is an impulse. Then is a correction. 1, 2, and 3. Okay, it's a correction. So I have to modify this. That let's leave it that way. Okay, so from here, sorry guys, from here to here, that's the impulse. Okay, then where is 50 to 61.8, guys? See, there must be impulse in the direction of the main trend. This is the impulse. Okay, from here to this level is the impulse. Number two, you must be able to define the correction of that impulse. We have been able to define the correction of this impulse as A, B, and C. Okay, A, B, and C. We are done with stage 2. Stage 1 is that there must be impulse. Stage 2 is that we must be able to define the correction. Definition of the correction shows that you have been able to identify, you have been able to name and even describe the, describe to us the characteristics of the correction you have spotted. That gives credibility to what you are doing. If you are not able to define and give us detailed characteristics of the corrective structure of that impulse, then you are whatever analysis you are doing will not have any credibility. Do you understand? In this case, we have defined it that this is ABC move. All right, this is an expanding flat because B here broke the level of A and C here. Look at it, guys. I don't want it to be too cluttered. We have A here, you have B here, you have C here. All right, B here broke the beginning of A, C here broke the end of A, so therefore it's an expanding flat. So we are done with stage 2. You must be able to define the correction. So we have done that. Stage 3 is that the correction must hit up to 50 to 78% fib retracement. All right, so let's do this from here. So let's move the previous one. Let's move the previous one, the previous fib. All right, so let's move this one. Let it not like that guy. So let's take a fib from here to this place. Remember the concept of orthodox top and orthodox bottom. You cannot take your fib and go to this B and you are looking for 50 to 61.8. No, because this B is part of the correction. It's not part of the impulse. So your impulse will stop here, guys. Boom. All right. So you are looking for what? 50 to 61.8. Want it to get here. The modification as we have given you here so that you don't miss some trade is this. I have to write it here. Must hit 50 to 61.8 fib retracement except a regular flat. Regular flat that can stop, guys, stop at 38% fib retracement because it is a flat correction. It's a sideways. It's a sideways correction. Simple, guys. Simple, guys. All right. So regular flat and some expanding flat can stop at 38. All right, and this is an example. Okay, so if I have to introduce 38, I have to activate 38 very quick, guys. See that this is 38 flat, and it may not even necessarily be only regular flat can end at 38 in a trend. Okay, because it is a sideways correction, and it's not necessary for it to come to the downside. It's not necessary to form a deep retracement like zigzag. Do you understand now? Okay, so now this is the rule number 2. It must come, you can see exactly 38 here. All right, exactly 38% field retracement here. Okay, then you take this trade to the upside. Boom, you catch this wave. And then number 3, okay, the correction must hit. You have done that. Number 4, you must spot a demand level that corresponds to that retracement level for buy, or the supply level that corresponds to the retracement for sell. Let's explain this, guys. Okay, let's explain this, guys. Okay, at the point that this correction is over, guys, you must look left. Look left. Before we even do this, let me explain to you what is called demand level and what is called supply level. Let's put this aside, guys. If you have, an impulse like this and you have a correction like this, if your correction is deemed to have been over here, then, and you have taken the field, you have done all the background check and everything, then you look left here. What is the nature of this candle on this impulse? You will notice that at this particular level that corresponds to this field level here, when you trace it to the impulse for buy, you are going to see a strong candle like this. Strong candle like this, a strong candle like this. Can you see? You are going to see a very strong candle. Okay, so that candle might be like this. The one that formed before it is just like this. The next one, guys, is like this. Pardon my drawing. The next one is small like this. The next one is like this. Okay, can you see this candle that formed before this big one on the buy? Treated like this. This one that formed after this big one on the buy, this one, trace it like this. Then between here, the price between here and here, guys, is areas where you have excess demand over supply. You don't see any supply. You don't see any down candle here at all. It's all powerful big candle to the upside. That is your demand level. Take a reverse for this same scenario for the sell. That is your supply level. Is that okay now? So if you now apply what you have just done here, if you apply it to this particular setup, if you trace it to the left, guys, you trace it to the left, what do you see? Let's remove this one. Just be following me gently, guys. You're going to get what we are doing here. Okay, you notice that you have a very good candle, very powerful candle here. Even though we don't have a defined, demand level here, but you see a candle here that is very, very big. So what I do in most cases is that I am not able to recognize this demand level here. I can't recognize this demand level because you can see all the candles are small, little candles. They are not big. And even the one that is big cannot give a defined, demand level. Just giving a tiny, it's not even giving a demand level. So because this point number 3 is not there, I'm not going this point number 4, because I can't spot it, I'm not going to take this trade. I won't take it because I cannot see a clear demand zone that will give me, an evidence of a push to the upside here. So this one is a rule out. We are not going to take this trade. Okay. Number 4, my bonus. My stop loss is usually just a few pips below 78% retracement for buy and above 78% retracement for sell. So if we had seen a demand level here, we would have put our stop loss at just below 78% retracement. That is the ideal thing to do. The reason is that in case this one decides to still come to 61.8, you are safe at 78% retracement. Okay, let's move to the next example. Right, so we have seen the impulsive move here, guys, and we've missed it. This impulsive move here, we've missed it. This one, we've missed this one, guys. Okay, but you have to wait for the next retracement. Okay, so you now have a retracement here, guys. Boom, boom, and boom. Can you see? So now, what is the rule? An impulse into the direction of the main trend. This is an impulse, guys. This is an impulse. Can you see? This is an impulse. You have seen it. You allow it to finish. That's very good. Okay, you have seen the impulse. Number two, you must be able to define the correction of that impulse. Can you see? We are able to define this correction of this impulse. This has marginally broken this. So this is an expanded flat, and this has broken this. For some people, it's a regular flat. So for some people, it's an expanding flat. Anyhow you take it, what is important is that you are able to recognize the corrective structure. So we have been able to define the corrective structure here, right? Really quick, guys. So the next thing is to flip that impulse. Flip this impulse from here. We are taking it from the wicks, guys. I know some of you will not take the impulse from the wicks. It's not correct like that. You have to take your impulse from the wicks. Take it from here to here. Can you see where is 50 to 61.8, guys? Right. Where is 50 to 61.8, guys? 50 to 61.8 is here, right here, guys. Can you see? So exactly you have hit 50 to 61.8. The retracement has hit it. That's what you want. Okay. 4. You must spot a demand level that corresponds to the retracement level for buy. So we want to do for buy now. So where is the demand level that corresponds to this retracement level? I can spot one here. Okay, I can spot a big candle. Let's spot that very clean candle. Look at it. It's a very clean candle. Okay, and when this clean candle forms, you will see that there's little candle beside it, and it just make boom. And not only that, it's a big candle that just made boom. It must break structure. Look at it. It has broken structure. Can you see? This is the structure. This is the resistance here. This particular move has broken it. So that shows that it's a powerful level here because it has broken the structure. Okay, so where is the demand level here that we're able to spot? Let me show you guys. Let me show you. I'll show you. Okay, let me show you the demand level, guys. From here, from this big candle, where is the candle that formed before it? It stopped here. Okay, let me use the other two so that you can get it very well, guys. It's a very clinical work, so you must be careful. You must be careful doing it. This is little candle before this big one. Where is the end? Where does it end? The wick here. Oh. Okay, now we can remove our fib now. Abi, we can remove our fib. Okay, so let's check. This candle, after it finished forming, the one that formed after it, where does it stop, like? Boom. Can you see? So this is your demand level. This is your demand level. This is the end of the fib retracement that corresponds. Check it to the left in that on that impulse. Can you see? You have a very clean bullish candle here. So this is our level. We are going to take the trade, and then and that is the number 4 point. So once I see this, all right, the bonus point, guys, is that you put your stop loss below 78% retracement. So if you take a fib, this impulse from here to this place, this is 78% retracement. Just mark it, guys. Just few pips below it, boom, that's your stop loss. Then you now make this move. Okay, let's clean this. Let's clean this. Okay, so this is your entry. This is your entry. This is your stop loss. Okay, and then you have your move. Where's the projection for your TP, guys? Where's your projection for your TP? I'm just adding this as a bonus. It's not part of what we are doing for today. So we have gotten our entry, we have gotten our stop loss. Then our TP projection is that just go to trend-based fib extension, pick it from here, drop it here, take it back to the level where you are entering. Okay, just target your entry at 100% fib extension. Where's 100% fib extension, guys? Look at it. Boom. This is your TP, and then just place your trade, and you risk just 1 to 2% of your trade. We're not doing risk management today. When else we meet, we'll do risk management. So you can grab these two very quick, guys. Your entry, your stop loss, and then your target. Okay, it's a moderate, it's a moderate trade of 3% of your account. You are going to make 3% of your account on this trade. Can you see? We're not able to catch this because there was one of the rules that was not met. Why? We were not able to determine the demand level on the impulse for us to take this trade. That was why we did not take it. Okay, now let's see this. Let's see this, guys. Maybe you have determined that this is the end of correction. It's an expanding flat, and this move you see here, you want to see it here. So how do you catch it, guys? How do you catch it? You have seen the impulse. This is the impulse. You are able to identify the impulse. That's the first point. I just want us to do this for a sec. Okay, it's an impulse that shows that you are going down to the downside. Okay, now after the impulse, what's the next thing? The correction must hit. No, you must be able to define the correction. Now we are able to define this correction, guys. It's a push up, a push down, and push up. This is a zigzag correction, guys. This is a zigzag correction. Okay, so we're able to define it. We know this correction, we're able to define it. The next thing is that the next thing, guys, is that the correction must hit up to 50 to 78% fib retracement. Why did I have to put this 78%? This 78% is necessary in case the correction is zigzag, which is what we're going to see right now. Very good, guys. Watch. This is impulse from here to here. So when we fib it, guys, can you see the correction has hit 78%, guys? Look at it here. Zigzag will always come to hit 78. That is why I included 78. I normally say 50 to 61.8, but this time around, for my rule, I set it at 78 because that is the general rules in case of zigzag. Can you see? So the next thing, guys, is to find out. Remember, all this check you are doing is at your entry time frame. It's not at your analysis time frame. It's at your entry time frame. The next thing you are going to find out is that it has hit 78% retracement. Okay. What is the next thing? You must spot the demand also, the demand level that correspond to that retracement level for buy, or the supply level that correspond to the retracement level for sell. Okay, now can we see a supply level here? Yes, big one, big one. You can see a big one, guys. Look at it. Look at this candle here. Big candle to the downside. Which one do you see close to it that end here? Here. Which one do you see after it that end here? Here. The whole of this area, guys, is a supply level. Market is qualified to fall. But because we have recognized this as a zigzag corrective structure, our instinct will tell us that it will get to this level before it will fall. So we caught this trade. I caught it right here with my community, trading community. We caught it right here, boom, to the downside. Can you see? So this is how you apply the same rule for what? For sell setup, for sell setup. If you don't see it, guys, you don't take it. If you don't see it, you don't take it. So this, and where do you put stop loss for this one? Above 78. Just put it above. If it hits you, no problem. By the time you put it above 78, if your entry time frame is 1 hour or 15 minutes, you are not going to get more than 30 pips stop loss. If it's 4 hours, you are not going to get more than 50 pips stop loss, 50 pips, 70 pips stop loss. Okay, but I know most of the people use 15 minutes and 1 hour time frame. So usually with this system, you always get 30 to 30, about 30 pips stop loss, which is very, very ideal for a day trading techniques. Okay, so just go and backtest these techniques I have showed you. Is part of my trading system. You know, the issue is many of us may not find a motivation to apply this, but I can tell you, trust me, guys, with all the videos, with all the contents I have put forward for you, I believe you should be able to trust my work. Okay, you should be able to trust my judgment. Go back to the chart. Leave trusting my judgment. Leave me, just leave me, put me aside. Listen to the lesson I have given you. Go back to the chart. Go and test them. Go and back test. Go and test them on the chart. Look for the direction. Do your background information, your background check. Do your fundamental analysis. After you have done, you have concluded on the direction. Analyze it. Do top-down analysis from daily, from monthly, weekly, daily, 4 hours to 1 hour. When you get to your entry time frame, the direction you are looking for, if it's a buy, you must wait to see a strong push in the direction of that buy. And after a strong push appear, you cannot fib it if the impulse has not finished. I'm telling you this. You have to get this. For people who are not watching my video to the end, this is part of the information. This is an example of information they're always missing because they watch just 20 minutes and they get out. At the end of the video, I always put a bonus. And the bonus I'm putting today is that never fib an impulse if that impulsive move is not ended yet. Before you can fib an impulse, you must even see the first leg of correction. What do I mean? If you have an impulse this way, okay, you can't fib it here because you don't know whether it will still push up. So if you fib it here, your fib level will be wrong. You can only start to fib if you see this move like this. You now know that, oh, the impulse ended here, it started here. This is why, this is how you can now come here and fib this level. Boom. Okay, that's number one. Another thing is that if after making this move and you are able to define this, if this market make a move like this, correction like this, and break this top, you cannot come and take your fib and say it's between here and here. No, this is the orthodox top. You cannot come and do something like this for me, like this to here. No, it's from here to here. This is part of the correction, so don't fib it, okay? Because you're going to have the C wave coming down here to complete the structure. That is where you can now fib from here to this place, from this place to this place, and then you now look for 61.8 here. All right, so that is what you do. These are the two rules, that you must follow after you have mastered these 4 different points. Go and try it. If your win rate does not increase from, maybe if you are having 30% win rate, it must go to 70% win rate. If you are having 70% win rate, if you follow this system I've designed for you, it will go to 95% win rate. Do you understand? The worst that will happen to you in most cases is a break even, in worst. Remember, if you are putting your stop loss below 78 for a buy and above 78 for a sell, you must appropriately define your risk based on the capital you have, your level of portfolio. You must be able to define it based on level of your portfolio, the stop loss gap, and the percentage you are willing to risk. These are the 3 parameters that will guide you to what? To calculating your lot size. Okay, and after you get your lot size, if you lose the trade, is that percentage you are willing to lose that will that will go. All right, so that is what I want to bring to you today. I believe is very educative enough, and I believe it's going to help you in your trading. So if you find this content very useful, don't forget to subscribe this channel. Don't forget to also share the content to your friends, share the channel, link to your friends, let them view the channel and come and learn there. Of course, I'll always told you guys, my intention is to bring to you on this channel everything you need to learn forex perfectly and from from an amateur level to a professional level. That's what I want to bring to you. And then all manner of things that you learn elsewhere that are not the real stuffs. I've created this channel to correct those impressions, so that you can see the market, raw, okay? You can look at the market and explain why every move is happening the way they are. That is the essence of this channel. So don't forget, subscribe, share, like, and comment on this video. Let me see what comments you have. If there's any section you don't like there, let me see it. If there's any section you love, let me see. If there's any mistake you have been making that I've been able to correct it here, let me see it from your comment. Right, so if you have also a challenge that you want me to do a video to solve for you, maybe there's something that been bothering you that you don't understand, also put it in the comment section. I promise you, I'm going to help you. That would be the advantage you will have by watching this content and by subscribing to this channel. Okay, see you next time, guys. Peace.